I'm not sure if you're aware of this, but there's a side hustle out there that outperforms stocks, bonds, real estate, and even gold. Well, if you're anything like me, you've probably spent time investigating different side hustles and ideas. You may have even tried a few, but you just haven't really found the one that kind of sticks for you. Today, I'm going to save you some time. I'm going to run through all of the research and investigation that I've done into different side hustle ideas that are out there. And spoiler alert, you might want to stick around to the end of the video to run through what I've found that I'm going to be investing my time and energy into as well. My name's Troy. Come with me on my exciting journey into the best performing side hustle over the last 30 years. Let's dive in. Now, as I explored different side hustles, each one raised new doubts within me. Is the time commitment that I'm putting into this going to be worthwhile? Is what I'm about to venture into going to be successful? And am I putting myself in financial risk in going down this path? These are all valid concerns. Starting a side hustle can be challenging. It's easy to get caught up in the fact of whether or not the time commitment or the financial risk is going to be too much for you. So after a ton of research, and trust me, I went down every rabbit hole imaginable. It was then that I found something that hit all the right notes for me and something that I wanted to pursue. So when I started looking into side hustles, I considered everything. I looked at stocks and bonds and crypto, real estate, even fine wines and whiskies. But none of them really felt like they were the right fit for me. Some of them were too risky. Some of them require way too much time or upskilling of information at the start. Others require just way too much upfront capital to get started. So let me break down some of the things that I considered, and we'll run through a pros and cons list for each one. We take a look at stocks. With so many apps available nowadays like Robinhood and Webull, it seems like the entire stock investing market is become more and more accessible for everybody. And the promises of riches can be extremely tempting. Let's take a look at some of the positives and negatives involved in that process. So the first pro with stocks is the potential for high rates of return. With stocks, if you're investing into the right companies, your capital growth on your investment can rise significantly over time. The next of the pros with stocks is the passive income that you can sometimes earn. What some companies will do is they'll actually pay you a dividend on the stock during the time in which you own it. And that varies from company to company. Not all companies do it, but that's certainly something that you can look out for when you're first buying that stock. So last of all is the long-term growth. The great thing about stocks is that you can actually make decisions about investing into things like blue chip shares. These shares get slower rates of growth, but are much more reliable rates of growth over longer periods of time. So a little bit of a safer option with stocks, but certainly something that's much more reliable. So the first of the cons that needs to be considered with stocks is the market volatility. The fluctuations that occur in the market can happen quite significantly. A lot of that occurs when you've got issues within the company that you've invested in individually, but also just the greater market can be impacted by what's going on with the global economy. So that's something that you really need to stick with and really understand, otherwise you can easily get caught out. Which kind of leads me to the next point, which is the need for knowledge with stocks. You really have to understand business and how the market works, and where those risks involved with the fluctuations that occur. So yeah, it's something you really need to take your time with before entering into it. So as a pass on stocks for me, I felt that the learning curve on them was way too steep and outside of my knowledge base. And I felt that the time that it would take me to upskill myself to be able to become educated on the market was too long, fell a little bit outside of what I was interested in. So yeah, like I said, it's a pass. Then I looked into real estate, because who hasn't heard that real estate is a great way of investing and making capital growth on your investment over an extended period of time. So the first thing to consider with real estate in regards to the pros is the market appreciations. Certainly, we see this in Australia right now. Our property market is booming, and you're seeing significant growth in it. Another great way of being able to get appreciation out of your property value is by doing a renovation. So what you're doing is you're increasing the appeal of the property, for a quick turnaround on resale sometimes. Another great way to earn income with property is purchase it and rent it out. The great thing about renting it out is that you get a passive income throughout the ownership process or period. So not only do you make a little bit of income while you're paying it off, you're also getting that appreciation on the property as well. So first up with the cons for real estate is the high upfront investment. So you need to make sure that you have either a large cash deposit or down payment for the property, or you're putting it against equity in your own home potentially. So there's significant upfront cost or risk involved with that. And then there's the ongoing things like repairs and maintenance that add to your expenses list. And secondly, it can be time consuming. Managing properties is difficult, especially when you're managing properties with tenants in it. Finding the right tenants can be difficult. Finding ones that you can trust can be difficult. And the alternate option with that is to get a property manager involved in the process. Now, when you're getting property managers involved, that comes at an expense. So that eats into the profit that you'll make out of the investment itself. Look, I most definitely don't have the skills involved to be doing renovations, so you can cross that side of property off of the list for me. I'm also not in a position right now to be able to outlay the upfront capital that you're going to require to get involved in properties. I think property is certainly something for me I'd really like to get involved in the future, but I just don't for where I'm at right now, it just doesn't fit for me. So I think, put a pin in this one. I'd like to get back to it at some stage, but just not right now. Next, I looked into cryptocurrency. It's been all over the news about its insane highs and devastating lows that have occurred. And everyone, I'm sure, has spoken to friends or family members that have invested and ridden those highs and lows. Typically they tell us about the wins that they have and not so much about the losses. Let's take a run through the information that I looked at and the considerations for both. So the first pro to consider with cryptocurrency is certainly high risk, high reward. The upswing that occurs in the market with cryptocurrency can be significant at times, and it certainly is what gives the market appeal right across the board for many investors. So decentralization is the next one. You have a lot more control over your investment with crypto without things like banks and governments getting involved. This is something that you need to keep an eye on though, because it does seem like more and more countries are trying to gain a little bit more control over what the crypto markets are doing, because the market in general can seem like it's a little bit rogue at times. So the first con to consider is the market volatility. It seems to me like the crypto market can go through dramatic swings in their value. And if you're not getting on the downswing or attending to it fast enough, you can lose significant amounts of money. Next up's the complexity of it. It seems to me like there's once again a steep learning curve with this, understanding what blockchains are and the different cryptocurrencies in the market and how they're linked to certain things. So it seems to me like the time that it's going to take to upskill me with knowledge is going to be significant. So in the end, it was the volatility with crypto that scared me. It just seemed like that the market swings too dramatically for me. It feels like, everybody's heard stories even of people waking up the next day and having lost thousands of dollars in value of their crypto because the market really seems easily manipulated through the whales, quote unquote. And these are the people who just buy or sell large amounts of crypto in blocks, which has significant rises and falls in the market. For me with crypto, it just seems this one's just a little bit too risky for me. So that's the reason why I didn't want to look into it any further. I also researched fine wine and whiskey. Wine is always something that's been a popular collector's item for an extended period of time. But what's happening nowadays is we're starting to see a lot more people investing into things like whiskey and spirits as an alternative way of investing. So first up with the pros, we have the steady appreciation that you can see with fine wines and whiskies, etc. These types of products always have a set period of a vintage or a run of them. And so once that has finished, that's where the price or the value of that product can increase over time. So number two is also that this is a tangible asset. So it's a physical asset that you can actually hold in your hands, which is appealing. So the first of the cons to consider is that the storage that's required with fine wine and whiskey, they require very specific ways and temperatures that they're stored. And so there's a lot of upfront cost involved with that, which can be a barrier to entry in the market from the get-go. And next up, they're a long-term hold asset. So they're an asset that you purchase and sit on for an extended period of time, which is fine. It's a good way of investing, and it's a way that all investments grow. But it's just, it's a one-off purchase, and then you're kind of looking at turning it over in the future. You do have to hold onto the product for an extended period of time. There are two factors for me, the reason why it's a no. The first up is the storage involved with this. You either have to have a cellar, which I don't have in my house, or you have to have temperature controlled fridges or storage lockers to make sure that you're maintaining the temperature for storage. The reason that this is important is that fine wines, whiskies, etc., they can actually spoil if they get too hot, making your investment completely useless. Next up is the upfront cost involved with collectible wines and whiskey. Your upfront costs can be in the hundreds or even thousands of dollars to get started, which is just a little bit too far out of reach for me. So it's a no for this. I don't mind the odd whiskey occasionally as well, so that poses a risk in itself in me drinking the assets that I have. So it's a no for me on this. Next up, I considered bonds. These are recommended to people who are after a much safer, more stable way of investing in comparison to things like stocks. So let's go take a look through the pros and cons and see how they stack up. So the first advantage with bonds is the stability of them. They're considered a fairly safe asset to get into. They do give you a low and slow appreciation over time, which is certainly appealing from a reliability point of view. That reliability leads us into the next point, which is the predictable income that's involved with bonds. The way that it works with bonds is that there is a fixed interest rate that you'll receive on your investment over the investment period. So that's certainly appealing. So the first of the cons to consider is the lower return on investment. So because bonds are a much safer option, they do give you a lower investment over time, so that's certainly a consideration. So the second con to consider is the interest rate risk. If interest rates do rise, this can have a dramatic effect on the value of your bonds. And when we're already operating in a space of a much slower and lower return, it can have a significant effect on your overall income. So bonds are just a little bit too passive for me. And when you add into it the lower rate of return that you'll receive on it, you remove all interest out of it for me. So that's why it's a no. Gold has always been a safe haven asset. So I had a look at how things like gold and silver can appreciate and gain value over time. So the first pro with precious metals is that it's a hedge against inflation. So precious metals tend to hold their value in a struggling economy, which is a great way of protecting your wealth. And next up, it's a tangible asset. So it's a physical asset that you can actually hold in your hands. It's also globally recognized as a form of wealth, which means moving forward, it should be an asset that you should be able to turn over relatively easily. So no income's the first of the cons to consider. Unlike some investments that are out there, you don't get any passive income throughout your investment period. So, it's a one-off investment, a sit and hold for a period of time, and then, hopefully you're getting capital growth out of it, which you should. But you're not making any income from it through that process. And then next up is the volatility involved with it. Even though gold and precious metals are considered to be a relatively stable way of investing, you still can get small fluctuations in the prices throughout that time. So I like the idea of having a physical asset that I actually get to hold in my hands that precious metals brings. That being said, I don't actually think that it's going to be the type of investment that's going to hold my interest in the long term. I don't know about you, but I'm terrible at staying involved and staying interested in things if it's not, holding and capturing my attention. Another interesting option that I looked at was classic and collectible cars. This market has a really fanatical fan base, so it's always got a strong option for the resale market. Let's go through the different options available and take a look at the pros and cons. So with classic cars, you can actually see significant appreciation in them over time. You have to make sure that you're purchasing the right products. It doesn't always have to be a classic or rare car. Some cars are sold in very limited or short runs, which adds to their appeal in the marketplace because anybody that missed out will certainly want to be purchasing it. Sometimes you can even turn those sorts of things over relatively quickly. And next up's the enjoyment factor with owning a classic car. There's a certain appeal involved with being able to own this asset and potentially drive it around and enjoy it. This kind of leads into one of the cons though, with the high potential for maintenance costs and repairs on the cars. Certainly driving a car around is a risk. There's going to be maintenance involved with it. I don't have the skill set to be able to be repairing or maintaining cars. And then there's the risk of being involved in an accident and destroying the value out of your product. Yes, you can repair them, but the moment that cars get repaired and they lose that original factor that is involved with these types of cars, then the sum of your value certainly drops. And then much the same way with gold and wines, the storage involved with classic cars is significant. It's even more so than the others because they're such a big and bulky item. The investment to store them correctly is significant. Look, if money wasn't an option, I would love to get involved with classic cars. It's always been a dream of mine to collect Ferraris. I realise how ludicrous that dream is, mind you. It's one of those things that you think about when you're dreaming about cross lotto wins and what you'd love to do. I'd love nothing more than to have a different Ferrari for every day of the week. But, this one's just a pipe dream. I don't think I'll ever be in a position to collect Ferraris. So, this one's a no. If you're still with me, thank you so much for sticking around. Now, if you're ready to join with me on my journey into the best performing side hustle over the last 30 years, give this video a like and subscribe to the channel to join in on the ride. So none of these ideas kind of quite felt right for me. Then I stumbled across something that did. It was simple, it was fun, and it was something that at different times in my life I certainly had a passion for. Drum roll please. The humble Lego brick. Now, you're probably thinking, how could a toy be a serious investment? Well, get this. The Higher School of Economics in Russia had people much smarter than me study the performance of over 2,300 Lego sets between 1987 and 2015. And what they found was out of this world. Retired Lego sets over this 28-year period have an average annual return of about 11%, which outperforms many traditional investments. Yes, you heard that right. Better than stocks, bonds, real estate, and believe it or not, even gold. So why does Lego perform so well? It really comes down to a few things. First up, it's limited supply. Lego only has a very short production run or a very set production run, normally between 18 to 24 months. So once the set retires, becomes no longer available, the value in the market increases. So next up is the strong fan demand. Lego has a massive and dedicated fan base that year on year tends to grow. The great thing about Lego is that every generation that is born that becomes Lego enthusiasts and lovers, they tend to hold on to that love and enthusiasm throughout most of their life. And last up is the cultural appeal. The great thing, the genius thing that Lego has done is they have connected themselves with really strong names like Star Wars and Harry Potter and the Marvel and DC series. What these connections tend to do is they really give fans a connection and deep love to the various sets that come out. The great thing about it too is that fans of those genres who are not necessarily Lego lovers can still get involved and love them as a collector's piece. And what's even better, you don't even need a big budget to get started. Some of the smaller sets that are out there in Star Wars, etc., hold some of the most appeal to collectors and can give you the most significant investment increases. So no investment is perfect, and Lego's no different. Here's a few of the pros and cons to keep in mind. So the first pro that we looked at is the high investment returns. Certain discontinued sets can appreciate in value quickly. And I'll give you an example of this. In 2023, there were 808 sets that were released. Of those sets, 12 months, 18 months later, we've seen 50 of those sets increase in value by over 100%. So the next thing to consider is the low initial investment. You can actually get into buying brand new Lego sets for anywhere from about $10 or $15. So your entry point in the market is really manageable. And last up is the enjoyment factor. Let's be honest, Lego's a fun product to follow and invest in. There's always lots of new sets being released, and there's always different genres, different themes involved with it that's worth keeping an eye on. So the first con to consider is storage. I know that's something that I was concerned about with other types of investment. As your collection grows, it can take up a lot of room. The great thing about it though is you can actually get started off with it, really economically with just some empty cupboard space or storage shelves in the beginning. Next up is market saturation. Not all Lego sets actually appreciate in value, so you do have to be sensible about the types of themes that you're going to invest in to begin with, and this is where a bit of research into the market and where those advantages and disadvantages lie is certainly important. And last up is the long-term commitment involved with Lego. Once again, this isn't the type of asset that you get any passive income through. So it is the type of investment you invest in initially, you sit on it for a period of time and get your appreciation in the value of that way. So patience is certainly the key. So here's the good news. Most of these challenges can be managed with a solid investment strategy, and I'm here to share mine. So if you're ready to get involved in Lego investment, click this link here to follow my investment strategy and how I'm planning on growing my portfolio over time. I guarantee you'll be riding the highs and lows with me as I figure this thing out. And if you're already investing in Lego or just thinking about getting started, drop a comment below sharing your journey into Lego investing, or some of the sets that you've found that have been really successful for you, or even run through some of the things that have been big misses and things to avoid. Let's create a little bit of a community here where we can share and help each other grow along your individual journeys. I'll make sure that I reply to every comment below. So let's keep the conversation going, and I'll see you in the next video.